Ever wondered how someone could turn a $10 painting into a cool $1 million? It sounds like something out of a heist movie, but this little trick plays on a fascinating loophole in the world of art and insurance. Let's dive into the so-called art of the insurance claim. Now remember, this is purely for educational purposes and definitely not a how-to guide. Trying this in real life is called insurance fraud, and it comes with some very serious consequences, like hefty fines and a long stay at a place you really don't want to be. So here's the hypothetical blueprint. The first step in this elaborate scheme is to acquire a piece of art. We're not talking about a Picasso or a Monet here. It could be anything. A painting from a thrift store, a local art fair, or even something your cousin painted in their garage. The initial cost is almost irrelevant. Let's say you pick one up for a mere $10. It's got some color, a frame, and it looks vaguely artsy. That's all you need for stage one. Now, this $10 masterpiece needs a glow-up, not on the canvas, but on paper. This is where the concept of subjective valuation comes into play. Unlike a car or a house, which has a relatively clear market value, the price of art can be incredibly subjective. What's it worth? Whatever someone is willing to pay for it, or in this case, whatever an expert says it's worth. So the next step in our hypothetical plan is to find an appraiser. But not just any appraiser. You'd need a friendly one, someone who's willing to see the hidden genius in your $10 find. This is the most critical part of the setup. Your friendly appraiser, perhaps for a small fee or as a favor, writes up a formal valuation. They might talk about the bold brushstrokes, the profound emotional depth, or the emerging artist's incredible potential. They'll use all the right jargon to justify a completely fabricated price tag. And that price tag isn't $100 or $1,000. No, they go big. They declare that this $10 painting is, in fact, a lost masterpiece worth $1 million. It sounds ridiculous, but with a legitimate-looking document from a certified appraiser, this valuation now has a veneer of credibility. With this $1 million appraisal in hand, you move to the next phase, getting it insured. You approach a reputable insurance company. You present your painting in the official appraisal document. The insurance company sees the paperwork from a licensed appraiser, and their job is to assess risk, not second-guess the art world's valuations, especially if the paperwork seems in order. They'll calculate a premium based on the $1 million value. You'd pay a few $1,000s, maybe more, for the insurance policy. To the insurer, it's just another policy. They are now legally bound to cover your artwork for its appraised value of $1 million. The trap is set. So you have your $10 painting, now legally valued and insured for $1 million. What's next? You can't just sell it, because nobody would actually pay $1 million for it. The value only exists on paper. The plan relies on the painting being lost. This is where the accident comes in. The painting needs to be destroyed or damaged beyond repair in a way that triggers the insurance policy. The classic scenario involves a bit of stagecraft. The insured painting might be hanging in a private gallery, a secure storage unit, or even a home. Then, an unfortunate event occurs. Maybe a water pipe unexpectedly bursts directly over the painting, drenching it and causing the paint to run and the canvas to warp. Or perhaps there's a small, contained electrical fire that just so happens to break out in the exact spot where the masterpiece is displayed, turning it to ash. It has to look like a genuine accident, a believable, unfortunate circumstance. The key is to destroy the evidence, the painting itself, so that no one can come back later and say, "Hey, wait a minute, this is just a $10 piece of junk." Once the tragedy has occurred, you file a claim. You contact your insurance company and report the devastating loss of your priceless artwork. You provide the original appraisal, the insurance policy, and evidence of the accident, photos of the burst pipe, the water damage, or a report from the fire department. The insurance company launches an investigation, of course. They'll look at the circumstances of the loss. Was the storage facility secure? Was the fire suspicious? But if the accident was staged cleverly enough, it will look like just another case of bad luck. The adjusters will review the claim. They have the appraisal stating the piece was worth $1 million. They have the policy you paid for. They have a report of its destruction. They might be suspicious, but proving the initial valuation was fraudulent is incredibly difficult after the fact, especially with the art itself gone forever. Proving that the burst pipe wasn't an accident is also a huge challenge. After their investigation, if they can't find concrete proof of fraud, they are contractually obligated to pay out. The insurance company cuts you a check for $1 million, minus your deductible. And there you have it. The $10 thrift store painting has successfully been converted into a $1 million payout. It's a cynical manipulation, a system built on trust and expert opinion. This whole scheme hinges on exploiting the subjective nature of art valuation and the procedural nature of insurance. Now, let's be crystal clear again. This is a crime. It's called insurance fraud, and it's a felony. People who try this get caught. Investigators are smart, and they've seen schemes like this before. They look for connections between the owner and the appraiser. They analyze the accident for signs of tampering. They look at the financial history of the person making the claim. A sudden, high-value insurance policy on an unknown piece of art is a huge red flag. The penalties are severe, including years in prison and having to pay back all the money, plus massive fines. Not to mention, committing fraud like this drives up the cost of insurance for everyone, because insurers have to pass on the costs of these fraudulent claims to all their customers. So, while it's an interesting thought experiment on how systems can be manipulated, it's a high-stakes gamble with life-ruining consequences. The real art is enjoying art for what it is, not for what you can pretend it's worth. This story is less of a financial tip and more of a cautionary tale about how greed can lead people to some very dark and foolish places. It's a fascinating look at the intersection of art, money, and crime. Thanks for watching. If you found this breakdown interesting, don't forget to like, subscribe, and hit that notification bell for more deep dives into fascinating topics. See you in the next